Hey, morning. Here we are. It's another Monday morning and quite a sunny one at that. And it's that time, isn't it? It's 8:30 on a Monday morning. And that means it's the property finance Q&A, which I do every Monday morning at 8:30. Bank holidays accepted, so I'm going to miss a couple of those over the next few weeks because we have bank holidays in May and that, don't we? And of course Easter. So I'm going to squeeze this one in while I can. And if you're new here, hi, welcome. Stick around, see what it's like, and if you like it, come back next week at Monday, and every Monday after that, apart from bank holidays. Now, what goes on a property finance Q&A? Well, it's one of those does what it says on the tin things, really, isn't it? You ask some questions, you stick them in the old chat box, and wherever you're coming in from, whether you're coming in from YouTube or LinkedIn or a couple of Facebook pages that I have, or a couple of Facebook groups. Wherever you're coming in from, hi, and I'm glad you're here. And if you're watching the replay, hello to you too. And thanks. Not everyone can catch it on a 8:30 on Monday morning. People have other stuff to do. So if you're watching the replay, hi to you. And if you are watching the replay, just put a hashtag replay. That lets me know you watched it. So thank you. A couple of people saying good morning, including Aston. It's getting close now, Aston, isn't it? Less than a couple of weeks away, and we'll be out in Jersey for the Ninja Achievers immersion event. And Aston's coming with me, and a bunch of other people too. So what have I been doing? Well, I've just finished my 4-day Ninja Investor program in Bristol. So I'm still down that way. Getting back home today. So yeah, that was 4 intense days. And people say, why did you do a 4-day workshop? And the simple answer is because I can't squeeze in that much content in any fewer days. I tried it, and you just then end up having crazy days, finishing at 9 o'clock in the evening, which is no good for anyone, really, is it? So, yeah. So we're a small bunch of people. I never have massive amounts of people deliberately on my Ninja Investor program. So, got some guys that are really fired up to go out and find the deals that no one else wants to buy, because that's what it's all about. It's about not following the herd, but going down the road less traveled. So, okay, a cup of tea in hand. So, hey, fire a question in there. Got a question? Fire it in, and let me answer it. It's about property finance, which I've got to say you're pretty good, because pretty much week in week out every question is somewhere around property finance. Occasionally I'll get a tax question, which I have to say, well, I'm not I'm not an accountant, so I don't answer tax questions. I defer that to an account. Okay, so we've got a few questions rolling in there. So I hang around here for about 30 minutes, sometimes a bit longer if it takes that long to answer the questions. But look, if you answer a question and I can see it in my chat box, which invariably I can, I'm going to hang around and answer it. It's the polite thing to do, isn't it? So here we are. D's up with some questions here. Hello, D. With commercial, if purchasing with a deferred payment, with the seller having a second charge, can I get a mortgage on it straight away, or is it like Resi where it needs to be bridging with deferred payment? Commercial lenders are a little bit more flexible than buy-to-let lenders, Resi lenders. So there is more understanding of deferred payment. Yeah, I understand, but their concern is your lack of a deposit in the deal, so your lack of skin in the game. So what you've got to overcome is their suspicion that you've actually got no money in the deal. Now, I'm guessing that the deferred payment is the deposit. So let's say you're deferring 30% of the payment, and you want to buy 70% of the property. So the issue is satisfying a lender on that. Now, there could be a different way to do it. And it could be that you actually set up a SPV, limited company, with yourself as a major shareholder, the current owner as the minor shareholder, and they can put a set of charge on it that way. So therefore, they're lending on 100% of the purchase price, and the owner, the seller, gets their deferred payment in terms of a shareholding. So that could be a better way to set that up. But if you want to do this, if this is actually a deal that you're trying to do now, Dee, then get in touch with me, and we can help you to work a way around that. You're coming through YouTube, so just go to the home page, look at the tabs across the top, look for the About tab, and click in there, and we'll be very happy to help you on that. Okay, you come up with another question. If I'm up and running, if an up and running SA property is valued on income, what markup does it typically take? Yeah, it's nowhere near as simple as 10 times this or 10 times that or anything like that. There's a whole host of things that commercial lenders take into account. It's all based around EBITDA. So what they want to see is your accounts to see how profitable you are, your occupancy levels over the last 365 days. So again, a full year's occupancy, so they can see, how good you are at filling your SA property. And then they'll make a judgment for that. So it's nowhere near as simple as 10 times this or 10 times that or any other 10 times. It's far more complex than that. Sorry, I can't give you an easy answer to that because there isn't one. But thanks for your question. And now we've got Ticker's back again. Hello, Ticker. Good morning. If I take a residential mortgage for a 5 or 10 year term, and later, after a few years, I want to change it to a buy-to-let, do I have to pay the early repayment charge on it if you go with the same lender? Yes, you do, because you are redeeming the mortgage. Just because you're redeeming it and keeping it with the same lender, see, here's the point. The lender's not going to pass up the charge to make some money out of you, are they? They're not saying, good fella, Ticker, thanks for keeping it with us. We won't charge you the redemption penalty. They will, because they're not going to miss an opportunity to make some money out of you. So you need to think seriously about committing to certainly a 10-year term, because hey, most people can't work out what they're going to do in 2 or 3 years' time, let alone 10. Excuse me. So there we are. So it's going to cost you money if you do that. Dee's back with another question, getting them in this morning. Dee, if I buy a property with bridging, and when I refinance, the mortgage valuation comes up short, what happens to the shortfall? Can I loan it, or will the mortgage lender not allow it? Okay, so you would still come up with you'd still repay the bridging, because the bridging always makes it is never going to expose themselves to the point where a down valuation is going to affect your ability to repay the loan. But it may just mean that you need to come up with some cash for a shortfall. Mortgage lenders invariably do not allow you to borrow the deposit, which would be the case in this case. So you really need to factor in a down valuation at the start of the process, and or have a way of getting some cash available. You could potentially borrow it privately, but if you've got a shortfall, it won't be a shortfall in cash to pay the bridger. It'll be a shortfall in the 25% deposit for the remortgage, or you could just take a lower amount. you could just accept a lower mortgage, and let's say not 75%. So you can do that. Thanks for your question. Here we've got a Facebook user. Now this, in case you haven't seen this before, this is what happens when Facebook's little security feature, they won't publish your name when you go out of Facebook, which you are now coming out of Facebook because I'm into a different streaming process, unless you give them permission. You give your permission, rather. You didn't, so it just comes up as Facebook user. Northern Ireland Finance, what do I know about it? Not a lot, to be honest, because I don't deal in Northern Ireland. We're mainland Britain, so can't really be much help there. I'm guessing this is the same person. Is there much difference? Don't know, can't help on that. So there's still some questions rolling in, so I'm careful to scroll down slowly so I don't miss any. Sunil's there. Good to see you back, Sunil. This will be my last live Monday morning. Oh dear. That's sad. Why is that? Let me read. As I have to go back into work from Wednesday after 2 years of working from home. Is anyone going to the Property Investor Show this Friday and Saturday? Well, that's a good question. I don't know. Is that the one at Excel, is it? I won't be there. But is anyone else going to be there? Yeah. Maybe someone will comment whether they're going there. But hey, Sunil, you might not be able to catch the lives, but you can certainly catch the replays. So make sure you watch the replays. Matthew, there we are. I met Sunil at my recent BRR Launchpad event. I met Matthew there too. Nice to see both of you. I've seen a listed building at a good price with a big rear courtyard. How likely is it that I could build a house on it? Well, it's possible. Planners tend to want to see access and parking. If you can fulfill both of those needs, then you're in with a shout. Now, again, my expertise, Matthew, is finance. It isn't planning. So you need to have a chat with a planning consultant to give you a much better steer on that, and preferably one that's knowledgeable in that local area. So there we are. So Eri, here we are. Hello, Eri. Good to see you. Excuse me while I just blow my nose a bit here. Sorry about that. A bit of a stuffy nose today. So is taking a bridging loan risky? Well, that depends, Eri. In do you know what you're doing? So everything is risky if you don't know what you're doing. Crossing the road is risky if you don't know to look each way and check for oncoming cars. Driving a car is risky if you haven't passed your test because you don't know how to control the car. So everything is risky unless you know what you're doing. So the basis of the question, I would say, is that you have got no experience in bridging. So yes, it would be risky for you. Is it risky for us? No, because we've arranged and brokered literally hundreds of bridging loans in the last 10 years or more. So if you try and do it yourself, yes, it's risky. If you align yourself with brokers like us, we will mitigate that risk substantially. So have you got a property you're thinking about doing bridging on, then you're coming through YouTube, all right? Thank you. Just go back to the homepage, look at the tabs along the top, click the about, get in touch, and we'll be happy to broker it for you and stop you making mistakes that you would otherwise make. David here, also coming to YouTube. Hi, David. You're interested in a property, but tenants are already in it. Asked if I can have it void and told it could take 8 months or so from the vendor to do from the debt or yourself to do that. How can I get the void quickly? Not easily, because tenants have rights, David, and you can't just shove them out in a matter of weeks because you fancy it. And which, of course, if you were the tenant, you wouldn't want to be shoved out in a few weeks. Then really, you shouldn't want to shove someone out of it. If it's their home, you shouldn't want to shove them out quickly. If they don't want to leave, there's a legal process to go through. Section 21, Section 8. So look, I understand why you would want it vacant, and certainly you should, because you don't want to take on someone else's tenant that you haven't vetted yourself. But listen, go and buy another property, or wait the time, the 8 months it could take. That's really the thing to do. So another Facebook user here. Now, just before I answer this question, guys, this is the last question. So we're not at my time limit yet. So got another question. Ping it in there, because when we get up to 9 o'clock, if the questions don't keep running, I just shut down for the week. That's the thing. You're not going to hang around here all day. Got stuff to do. So got a question? Ping it in there. Any idea what BRR can be done on a scale of millions? There's no reason why you can't do bigger BRRs on bigger properties, or more likely bigger portfolios of properties. Okay, so BRR doesn't work on trophy homes, should we say? If you're buying mansions, it's difficult to do that because the market to sell them and to rent them is really, really quite small, isn't it? Who's going to pay you, I don't know what, £10,000 to rent a property? Premier League footballers and the like. There ain't many of those around. So if you're going to do it on a scale of millions, it'd be because you're buying, let's say, multiple blocks of flats, like 100 flats or something. Can you do it? In principle, yes, you can. But hey, you've got to have a track record. So if you haven't done many deals successfully and shown you can make money, going to a bridger and saying, hey, can you lend me 5 million to buy this 50 flats? They're probably going to say no, because you haven't showed us you can operate at that level. So in principle, yes, but it depends what the properties it is and your experience at operating at that level. Thanks for your question. You're planning to change to SA? Yeah. Okay. So that's the previous question. Yeah. That doesn't change the fact that you can't just boot people out to suit your own needs, David. So it will take what time it takes, or go and find a different property. There we are. Ticker's back here with another question. Good to see you, Ticker. Again. My 2-year term is finishing soon with a buy-to-let. If I stay with the same lender and take another 2-year deal with them, do I need to involve solicitors in that scenario? No, you don't. You don't, because there are no legal issues to sort out. The lender's already done the legal underwriting, if you like. They're happy with the property. They're happy with the tenancy arrangements. They're happy with you as an owner and a landlord. So you just if you take their deal, no valuation fee unless you want to borrow more money, no solicitors fees, but you'll most likely have an arrangement fee to pay. But they can add that onto the mortgage if you want to, or pay it. So there we are. See, some of the questions are quite simple answers, aren't they? Who's next? I've got a Facebook user here coming up. Okay. I've heard it's a struggle to get a buy-to-let mortgage when a property I'm interested in doesn't have a kitchen. How true is this? And is this when a bridging loan comes in? Okay, you've heard correct. And here's why. Because the basis of buy-to-let mortgages are ready to rent. In other words, you can put a tenant straight in there. Now, how many tenants do you know that would move into a property and pay you the market rent for a property that hasn't got a kitchen in? Probably none, I would say. So therefore, if you can't rent it out, you won't get a buy-to-let mortgage on it until you've made it in a position to rent it out. But buy-to-let lenders are not going to give you a mortgage so you can spend weeks on end, even months, sorting it out. Minor things like upgrading the decoration or replacing an average kitchen with a nicer kitchen, that's okay. But the point is, it's got to be rentable. So is this where a bridging loan comes in? It is, unless unless you can fit the kitchen in between exchange and completion. So if that's all it is, it's really good apart from the kitchen. So it's in good decorative order apart from the kitchen, and you can get the owner's permission to get in there and fit a kitchen between exchange and completion. Then you could possibly make it mortgageable like that, and then you wouldn't need bridging. Good, there we are. Nick, good to see you, Nick. Hope you're feeling well at the moment. Bridging is fast. It is, usually within 28 days, because it's used extensively to fund auction purchases when you only get 28 days. It enables deals to close quickly, true again. But what happens about surveys and searches that normally take the bulk of the conveyancing time? Two things. A bridging savvy solicitor, which you should always use, and we know some through our brokerage, they know that they can get surveys and searches done faster. So that's one angle. Use the right solicitor that's not going to take weeks and weeks. The second way to accelerate it is to use indemnity policies. So the solicitor buys indemnity policies which indemnify you against a defective search. So in other words, and it only costs you like £100, £200, something like that. So if the search comes back and the results in the search devalue your property by £10,000, then you can claim on your indemnity policy. So Peter says, are there many tier 4 lenders in the market now? Okay, explain what you mean by tier 4, Peter. Pop another explanatory post in there, and I'll deal with that. Okay, Erai's back with another one. How is the process to remortgage? Oh, pretty simple, really. You ask us to start the process. We'll send you a fact find. You send back the fact find, and then one of our brokers in the brokerage researches the lenders available to you, reports back. If you like what we found, you engage us to work as your broker, and we process it through until you get the remortgage. That's how it works. Dee's back with the question: if I remortgage for hire with the same lender to release some cash, do I need to involve a solicitor? Okay, so it's coming on from Ticker's question. No, because the legality of borrower and lender are unaltered. You would have to pay a valuation fee because they would need to justify that the property has the additional value, and you'd pay an arrangement fee as well, but no solicitor. Good, there we are. So quite a few people coming in from different places now. We're coming up to 9 o'clock, but hey, I'm going to be out in London and Birmingham over the next few weeks doing a one-day session called my BRR Summit. I'll give you the lowdown on how to make BRR work, and there'll be another couple of speakers on there on related subjects, but different subjects. So come along and join me. It's £47 for the day. Giveaway, isn't it? £47. And that includes your lunch and parking at the hotel. So to check on the dates in London and Birmingham, I'm going to put this in the comments here. There we are. Quite simple. brrsummit.com. Very easy. There's quite a few people coming in through YouTube today, and if you jump on, if you're a Facebook person as well, you might like to come and join my Facebook group, which is Recycle Your Cash for Property Investors. You can keep up to date with the latest stuff that I'm doing, and also if you have a question during the week and it won't wait until the following Monday, or as coming up with bank holidays the Monday after that, join the Facebook group, because I'm in there daily, answering questions as they come up. Go and have a look. You'll see some of the questions that I answer in there. So you'd be very welcome. Some people are coming in through there already. That's great. So I'm going to be wrapping up. It's coming up to 9 o'clock, so I'm going to be here for that sort of time. Thanks to everyone for the questions this morning. Thanks to excuse me. Thanks to people for watching it, either live or on replay. And you see, and this happens pretty much every week. I'm just about to wrap up, and in comes someone with another question. So if you squeeze it in there quick enough, I'll answer it. And here it is, another Facebook user. It says, morning, Kevin. Is there a bridge in lending for less than 30k? Pretty much no. And there'll be one or two, but I would seriously suggest that you don't get a bridging loan for less than 30k, because you'd be it would be a massive waste of your money. Why is that? Because you've got to do valuation fees, legal fees for both sides, the bridger and you. You may have a broker fee too. Now, that's probably not going to be less than £4,000, which is a huge amount when you're looking at less than £30,000. And if you're sensible, you're going to get a personal loan, which you can get for around that figure, which has got zero costs. There's no charge, there's no solicitors, there's no valuation, and it's in your account within 24 hours. So you'd have to be pretty dumb to want to get a bridging loan for less than 30k, really, when it's possible to it's possible to borrow that privately too. So you don't want to be using bridging with the setup costs incurred in that for borrowing less than 30k. There we are. Okay, so there we are. I thought I was going, and now the questions start rolling again. So I'm going to hang around for a bit longer. There we are, because I'll always answer a question. So we are. Massey. There we are. Purchased a flat in London. Didn't receive any documents after 7 months from the land registry. Can I apply for a remortgage? I spent 30k on the valuation. This is not how you use mortgages. Let me find a video for you, Massey. You've gone down the wrong angle here. If you planning to refinance it and renovate and refinance, you should never have bought it on a mortgage, because your lender, and you wouldn't have got the mortgage if you'd have said that. If you'd have said to your lender, whichever lender it is, hey, I got, can you give me a mortgage for a few months? I'm going to refurb the property and then I'm going to redeem your mortgage. They would have said, no, get lost. So, you need to, you can't undo what you've done, but you need to rethink how you do this. This isn't going to work on a repeatable basis. I'm going to find a video. I suggest you watch this, Massey, because this is going to help you to understand why this is not a repeatable, viable way of investing in property. Let me just scroll down until I can find it. Right, here we are, I found it. Now I'm just going to cut and paste this. And what is it this week? It's about why you should never be using mortgages. Right. So here's the first thing. Get yourself up to speed, Massey, on how you should be funding buy, refurb, refinance, because it isn't with a mortgage. You should be buying it with cash or bridging finance. But can you apply for a new mortgage if you've owned it for more than 6 months? You're eligible to apply for a mortgage with most lenders. They may want some of them may want to see the evidence of purchase on land registry. Some of them may accept your solicitor's completion statement as proof that you've owned it for more than 6 months. Good. Dee says brilliant again, thanks. I'm glad you thought it was brilliant. Thank you. Von, there we are. So another one of my ninja investors that's doing my advanced training, Ninja Investor Program. Is there a way of adding value to a low lease property and an absent freeholder, or is it a big no-no? Von, it's a big yes. There's a different way to do it. Now, in your training, and you've got a PDF of the workbook as well. If you go to the 50% BMV module and you look down there and you look for the short lease section, you'll see a recommendation for Tim Bishop, and his company is the company that will handle that for you. Get in touch privately. We've got each other's emails, so just email me and I'll help you with that. Good. Okay, so Peter's come back with tier 4 lenders that would lend when the client has a not a great credit rating. Possibly, but there's much greater intolerance now for poor credit, because why would a mortgage lender give someone poor credit? You've already shown that you're not very good at making payments on credit agreements that you make. So why would they give you the opportunity to become a bad payer to them as well as a bad payer to everyone else that you've been a bad payer to in the past? And the answer is most lenders won't. And any lender that does is going to make you pay handsomely for the privilege. So they're going to ramp up the interest rate, expect to pay certainly 5% plus, and probably anything up to 8 to 10% for a lender that would take that on, depending on how bad it is. If you've missed a payment here or there, it's not so onerous. But if you're into things like defaults, county court judgments, that sort of stuff, so you've showed yourself seriously incapable of keeping up to the credit agreements that you take out, it's going to cost you massively. Okay, so there we are. We've done the questions again. So quick slurp of tea. And unless someone sneaks in with a last minute question, I'm going to say thanks very much for watching. Really appreciated your participation. Thanks to all those that asked the question. Hey guys, couldn't do it without you. If you didn't ask these questions, I couldn't provide the answers. And then everyone else couldn't benefit from the knowledge that I share. And I love sharing knowledge. It took me 20 plus years to learn it, so it's good to share it. So I'm going to say cheerio. As always, busy week ahead for me. And I'll be back here 8:30 Monday morning. Nick says, you're good. Thank you. Think some Facebook questions might not have come through. If they haven't come through, I'll go through them later today and I'll pick them out and I'll answer them personally. So everyone that asks from wherever you come from, I will get a reply. But thanks for that. Massey said thanks. Yeah, okay. Yeah, happy to help you there, Massey. There we are. Nick saying thanks. Okay, guys. Have a great week, and I'll see you next Monday. There we are.